All right, how we doing? What's up, everybody? Articers, what up? CB, what's up? What's up? What's up? How's everybody doing? Hopefully, y'all can hear me. Hopefully, everything sounds good. I'm going to get into it in 1 second. Let me set up my lights. All right. What's up? What's up? What's up? SRP, what's good? Hi. Joel, what's up? G, what's up? What's up? How we doing? I got my coffee. I'm ready to get this forecast going. I'm gonna let a couple more people get in here. All right. How you doing? How you doing? Let's get into the charts. What's up? What's up? We got the little face cam going now. I don't know why it looks like that. Oh, it's just shiny. Yeah, this mic looks weird. Let me see if I can get this looking better. If I go like this, nah, this is not gonna work. Hold on. You guys might be hearing a lot of noise right now. I'm sorry. Here, I'll mute the mic really quick. All right, there we go. Much better. Pull this up. Boom. All right, family. It's really okay. My fault. I just like getting things looking good. All right, there you go. We're gonna leave it like that. How's everybody doing, man? I just got done playing pickleball, so I'm all gross. I'm not even gonna lie to you. Like, I need a shower, bro. I need a shower, bro. But I'm on a time crunch. I want to get the damn, what is this? I want to get the weekly forecast out at noon. So this is a green screen right here. Boom. All right. Why are we looking at crude oil, bro? Okay. First things first, man. First thing is I'm in a good mood, bro. I'm in a good mood. First things first. Green screen made it so good. I love it. Yeah, right? It doesn't look so much better. Because now I'm not like, now it's not all over the, exactly. Now it's not all over the screen. Now it's just like very subtle little piece of the stream. Much, much better. Cheers. I love y'all, man. I love this. All right, so very first thing that we do, I'm gonna turn the music down really quick, just slightly. Very first thing that we do every single Sunday, y'all people that have been here, everyone that's been here, you guys know the drill. You know exactly what I'm about to say. Very first thing that we do is check the economic calendar for the week. I'm gonna go ahead and remove all these from our list from last week because I haven't done that. I forgot to do that. And yeah, the very first thing that we do is start with the economic calendar. We let the economic calendar guide us. Yep, it's our roadmap. Exactly, Articers. It's our roadmap for the week. It tips its hand, its price, and like it's just knowing how price is going to deliver before it does. Essentially, obviously, it's not a guarantee, but it gives us that level of anticipation to be like, all right, this is the day where I really want to be focused because I think we'll move. And I saw it last week too. Like I didn't trade on the days that there wasn't news last week. And then those 2 days with red folder last week were the 2 days that I took trades. So it works out like that on purpose. Like it's very, very intentional. So Monday, I'm sorry, this coffee's hitting. Monday, we have no news on anything. No currencies have news. Monday might be a dud. We already know that Mondays are suspect to be accumulation for the weekly profile. What we tend to do when we're talking about, you know, a weekly candle, the delivery of a weekly candle, right? Everything is open, high, low, close, or open, low, high, close, a bearish or bullish candle. When we're talking about the weekly delivery, Monday tends to, you know, consolidate, be accumulation for the weekly profile. Tuesday or Wednesday tends to set the lower high of week, and then we get our distribution, and then we close, right? So Mondays are already sus in low probability usually. Mondays and Fridays, in my opinion, at least based on my data, are the lower probability days for me. The days that I love to be trading are the days in the middle where we're expanding, and those are the high probability trades where I usually win. So Monday we have no news. Tuesday we have Canadian dollar red folder and US dollar red folder. That's it. That's all that we have. CPI for Canadian dollar, and then core retail sales for USD. Wednesday we have pound, New Zealand dollar, US dollar, and Australian dollar. So there's there's a good amount of news this week. I love to see that. Love to see that. So we got USD news on Tuesday, USD news on Wednesday, USD news on Thursday. And so Monday and Friday are the two days without USD news. Which you already know, like I just said, Mondays and Fridays I don't like. So on those days this week, I already know I'm going to be more skeptical. I'm going to be more demanding of price. When I pull up to these charts on Monday and Friday, because like I told you guys recently, I've been focusing on futures, which is, going to be US dollar correlated indices and whatnot. Because of that, we have no USD news on Monday and Friday. So I'm going to be more demanding. I'm going to be more skeptical of price on those 2 days. What's up, Ahmad? How we doing? So yeah, very, very important to understand. Thursday we have pound, US dollar, and yen red folder. Friday we have yen, pound, and Canadian dollar red folder. So there's lots of volatility this week. It's looking very promising. Monday and Friday for USD are looking lower probability. I'm going to be more demanding and skeptical. And with that being said, I'm looking to trade on the days that there's red folder. I'm looking to, be trading on the days when price is going to show the intention to want to move, when price is actually going to have the willingness to expand. And when it's not, I'm going to be sitting out. When it's chopping, when it's consolidating, when it's not showing willingness to move, I'm not putting on risk. Because why would I put on risk when my edge isn't present? Why would I put on risk in low probability, unfavorable market conditions? So I was talking to the premium members in my academy in the group, and I'm telling them, I haven't traded before. This is at the start of last week. I hadn't traded in like 9 days or 10 days. And the reason for that is because the market conditions weren't favorable. I didn't go into drawdown. I didn't start forcing trades. I knew that my edge wasn't present. I knew that the market conditions were not favorable to make money, so I didn't put on risk. And then as things have cleaned up, now I'm looking more to put on risk. Now I took 2 trades last week. I ended the week green. I was 1 for 2 last week on crude oil. So that's how it has to be. You have to know when to press the gas. You have to know when to let off the gas, when to put on risk, when not to put on risk. You have to be able to just endure the ups and downs of the markets, because that's trading. That is trading. It's ups and downs. So rant over. We start on dollar. You guys know the drill. Dollar. This was our area that we were interested in before. We had already swept that now, obviously, and we have swept that for a while. Caused a pullback on the weekly. And this is where I was looking for price to draw to. We had a strong pullback, which is a weird candle here, to start last week, and then we ended up selling off more. So I'm still looking at the sell side. My eyes are still on the sell side to go. I still think that we continue lower. We'll have to drop into the lower time frames and see how those are looking, but I'm still looking at this sell side to act as a magnet. This sweep of that monthly caused that retracement, right, into the weekly PD array, into the weekly premium array. And now we're respecting that and trading lower. The wicks are indicating a respect of this bearish weekly fair value gap, this weekly SIBI on dollar. So I'm looking for lower dollar still. Let's drop into the daily, see how that's looking. Daily looks promising for lower as well. I don't look at bonds. I just don't feel the need. I'm not going to say that they don't work, because they do work. Bonds can be useful, but to me, it's just noise. I don't need it. I really try to, so no matter what I'm doing, this is really important to understand. This is like the foundation of everything that I do. No matter what I'm doing, I'm trying to get to the destination in the most simple way possible. So just an analogy, right? If we're both driving from wherever, the United States to Canada, right? We're both going north to Canada. One of us is going to take an extremely difficult route, going left, right, all over the United States, and then getting there. And one of us is going to get to Canada in a direct route on a flight. So one of us is going to get there in like 7 days. The other one's going to get there in a couple hours. Which route are you going to take, man? Like, it's common sense. You all know the answer to that question. So this is the approach that I have with trading, right? If we're going to get to the same destination with whatever it may be, I'm taking the simplest route that I can to get there. And so that's very important to understand, because when you have a simple strategy, when you have a simple understanding of price, you can put your focus on yourself. You can put your focus on the risk management, and that is where the consistency comes, because there's ups and downs in trading, and you have to be able to endure them. I'm going to go like this because I turned on my tracking on my camera, so now the camera's going to move. Shoot, yeah. All right, hold on. I accidentally turned on the tracking. What just happened? Hold on. Oh, I thought I just canceled my stream. I was about to cry, bro. Hold on, man. Give me 2 seconds, family. I gotta fix this. Turned off the tracking. My fault, guys. All right. Boom. All right, we're good. All right, let's get this going, man. A lot of me ranting. Hopefully that was valuable. Pretty hit or miss with the rants. Either they're super valuable or I'm just wasting time. So, no, I think my rants are really valuable. Daily, all right. Daily gap is being created here. Daily lower prices. Strong daily expansion candle the other day that we can see here. Perfectly explained. Thank you. So this daily gap, I'm looking to act as a draw to send us lower towards that weekly. So what I'm doing from the top down always is framing a narrative. I'm understanding price is drawing here on the weekly. How is price going to deliver? How is price going to deliver to where it's drawing on the weekly? Well, if I'm expecting price to deliver to the sell side on the weekly, how is it going to get there? That's the narrative. So how is price going to deliver towards that weekly gap? Well, I'm looking at this daily internal to act as a draw to send it lower. So up to go down, right? This is how we build a narrative. This is where the edge comes from. This is where probabilities start to skew in your favor, right? It's not just an entry model. A lot of you know about the unicorn. A lot of you know about an entry model, 2022 model, whatever. The edge is not in that. The edge is in your understanding of price from the top down and where it's going. Framing a narrative, understanding the draw. That is where the power of ICT in his concepts really come from. It's not the model. It's not the entry. Go into your chart and just trade one entry model and you're not going to be profitable, I promise you. Because there's a lot more to it than that. So I'm looking for price to trade into this daily gap, this area of, fair value, offer fair value, seek liquidity. That's what I'm seeing on dollar, up to go down, weekly sell side still as my draw. And yeah. So as you guys know, the currency futures are going to be the same analysis as the majors. So for all my forex guys, the analysis that I do on 6A, 6B, etc., it's going to apply to the majors. So I'm not going to do the majors, I'm just going to do the currencies. Australian dollar, we have not much to, take from this monthly. This is the leg that I'd be looking at. Shoot. Right, not much to take from this. Chop. Low probability monthly conditions. Weekly, this is where things get a bit more interesting. We have this gap here. We have potentially lower dollar. So if I'm expecting lower dollar, I'm expecting higher currencies. And so if the lower time frames are shifting here, could be interesting for higher. But we did just create this weekly SIBI. So now we have trapped order flow. Now we have a bullish weekly gap that's going to trade into a bearish weekly gap. So when we have trapped order flow like this, a lot of times it causes consolidation in price. It causes low probability chop because we're trapped between PD arrays on the weekly. So that's something I want to keep an eye on. That's something I don't like. Right? So now we have this daily gap creating. So this is how I frame my narrative. Well, I'm expecting us to trade higher into that weekly gap. So I'm expecting us to go lower into this daily gap to trade higher towards the weekly. Once we get to that weekly, I want to see how we react, because that might cause low probability chop. We might not get the greatest conditions here. So I don't love this. Once we get a disrespect of this, or we get gaps on the daily through this weekly and we show intention through that weekly gap, it becomes a lot more interesting to trade towards that sell side or buy side for me. Sorry. Very important to understand. Monthly bullish order flow. Weekly area of fair value, where we can potentially seek this liquidity, but I want to see gaps higher. I want to see intention to actually move higher, because right now we're just having these sloppy candles. Both of these candles are not high probability. Yes, they're showing a sign of respect, right? It's clearly respecting this area of fair value. It's clearly showing, those symbols or signatures of respect, but I want to see intention on these lower time frames. I want to see price actually show that willingness. And what do I mean when I say that? What do I mean when I say intention and willingness? I'm asking you guys in the chat. Somebody answer that question in the chat. When I say I want to see intention from price, when I want to see willingness to move, what do I mean by that? Yup, thank you. Thank you, Nemo. You want to see fair value gaps? Yup. You guys have been studying. Do you like the 4-hour displacement higher? We're getting a gap on futures. On which are you talking about? On which futures? Fair value gap, large candles, fair value gap. Yup, exactly. You guys have been paying attention. I want to see fair value gaps get created by price. So large body, obviously candles, displacement higher. I want to see these gaps get created to see intention from price. Because when price isn't creating fair value gaps, it's not showing the intention to want to move. If price isn't showing the intention to want to move, why do you want to trade it? It's simple. Are large candles enough without fair value gaps? I demand fair value gaps. I need to see fair value gaps. So no, for me, no. For how I trade, no. GBP. Do you like the 4-hour displacement higher we're getting on GBP futures? We have an overlapping too. So we have the weekly gap, 4-hour display. Yeah, I like this. Yes. But this is exactly what I called this out for the premium members. I was watching this area here, this chop. Once we swept this buy side, I really wasn't so I was looking at longs on Friday. I think it was Friday or Thursday on pound. But I really only wanted longs towards this buy side, because I knew that we could potentially sweep this and trade back into the range, because look at these candles. And it was the end of the week, right? So we can move back into this range, which is exactly what we did, and I didn't end up taking a trade on this. But it's really, really important to understand. So now, I don't love the way we're just chopping. We haven't created new gaps off this area of fair value on the 4 hour on pound, but we are respecting it. So what I would like to see at the minimum here is a new 1 hour gap higher at the minimum. Why? We have bearish fair value gaps on the 1 hour. So at the minimum, bare minimum for me on pound, I need to see a new 1 hour gap higher out of this 4 hour area of fair value. Ideally, most ideally here, I want to be seeing 4 hour gaps higher again. I want to see a new 4 hour gap, a new 4 hour leg to be traded off of. So I want to see a new gap expansion candle get created here and then trade off of this. Because right now we're just chopping. So when in doubt, demand fair value gaps. When in doubt, let price show the intention. Be skeptical of price. Be demanding of price. That's where the win rate comes from. On what time frame do you want to see the fair value gap? It depends on the time frame alignment. It depends on what PD array we're trading off of. But just a good general rule of thumb, if price is not creating fair value gaps on the higher time frames being monthly, weekly, daily, 4 hour, if it's not creating gaps on those time frames, it's low probability. Because of the weekly, you want to see a 4 hour gap. Exactly. GBP USD is this, bro. This is what I just explained. So I'm not going to be looking at GU, EU, AU because 6A, 6B, 6E is all the same thing. All of these, the only difference here with these currency futures is that 6J, 6S, and 6C are actually CAD USD, CHF USD, JPY USD, but it's all the same thing. You just flip the analysis. It's all the same stuff. So let's look at Canadian dollar. Again, this would be the same analysis on USD CAD, just flipped. That's it. Because I'm having a brain fart. Because USD is the quote currency. That's why. So all these currencies are the base currencies in the currency futures. USD is the quote currencies. If weekly is bearish and daily is bullish and we have more draw on the weekly, what would you expect? I would be waiting for the 4 hour to shift bearish towards that weekly. So, Ahmad, if the weekly is bearish and you're expecting... Dude, I keep turning on the tracking of my camera. Oh my gosh. I got to turn that off. Sorry. If the weekly is bearish and we're expecting the weekly to go lower, you want to, at the bare minimum, be seeing the 4 hour shift and point lower as well. If the daily is bullish. All right. Let me get this going. Monthly. Sloppy. Not much to take from that. Weekly. Gaps higher. Intention on the weekly. All right. We have this area for value. I'm looking at this gap. We're creating a new weekly gap. So I don't like this. We have conflicting things here, right? We have a bullish fair value gap higher, and we have a bearish fair value gap getting created. So these currencies are potentially going to have trapped order flow. I'm looking for that weekly gap to act as a draw. So I'd be expecting higher on CAD, and then from there I wanted to, gauge how price reacts from this weekly SIBI. Does it expand through? Does it create new gaps higher on the lower time frames through it? Or does the 4 hour and 1 hour order flow shift bearish here? That's how I'm gauging whether or not we react from that weekly. Monthly. Bullish. Not the greatest delivery. There's really not much to pull from the monthly on these time frames. Weekly gap, respecting, but again, not showing that much intention. It's not showing too much intention. I want to wait for gaps. I want to see gaps. These gaps are your... Okay, there is a daily gap. I like that. I like that more, actually. So I actually like Euro better than Pound right now. Why do I like Euro better than Pound? Euro is creating gaps out of that weekly area. Pound is not. So Euro is showing that intention on the daily, which I actually didn't expect there to be a gap here. That's pretty nice. So Euro looks interesting. I like this. Euro and Pound go on the long list. So do you guys see the difference? Weekly gap getting created on Canadian dollar. Out of a bullish gap. Euro, no weekly bearish gap getting created on Euro. Out of a bullish gap. Daily gap getting created out of that gap, right? Do you see the difference in arguments here? The other currencies have bearish weekly fair value gaps working against them. Euro does not. Pound does not. So it's really, really important to understand that. How Euro futures, same with Euro. I looked two charts and that's what you said. Two of them the same. How is Euro futures the same with EU? Because Euro futures is Euro USD. It's just the currency. 6E is Euro. These are just the individual currency futures. These are the currency pairs. Yes, it's enough to just look at one of them, whichever one you're trading. So if you're trading futures, only look at the currency futures. If you're trading forex, you really only need to look at the individual forex pair, unless you want to use those currencies like I've taught in the past, using that currency duality theory, using the understanding of strength and weakness of currencies, individual currencies. That's another thing that you can do. All that stuff I teach, but that's up to you. Absolutely, there's logic in everything that we do, man. Logic in everything that we do. Everything we do is intentional, deliberate, it's calculated. Nothing that we do is emotional. Nothing that we do is just a whim. Everything that we do is based around sound logic. The currency future, it's called currency duality theory is what I like to call it. That's sauce for forex, but some people don't like it. Some people love it. It really depends on the person. Yen has been extremely bullish, which is really interesting because, I mean, come on. Look at yen, right? But yen is having a strong monthly pullback. Creating a monthly gap. I wasn't expecting this strong of a pullback. We traded into this area of fair value and we're now creating gaps through it. So we might actually go for this buy side. Not much to take from this weekly. We haven't created a new weekly gap, which is interesting. That shows a lack of intention right now to go higher on the weekly. We have this new leg. There's not much here on yen. I don't love it. I'm just going to skip it. All right, so if I don't love it, bro, if it doesn't make me feel good inside when I'm looking at the chart, I'm not trading it. Relative strength analysis. Absolutely. Relative strength analysis. Relative strength and weakness. When you add that onto a pre-existing model, when you add that onto a pre-existing trade idea with sound logic, it just adds probabilities. It just adds more percent to your win rate, right? So you're increasing the likelihood of you winning that trade when you're shorting the weaker of two correlated pairs. When you're longing the stronger of two correlated pairs. So there's so much logic behind, demanding that and making sure that you implement that. Would you suggest trading London Open or New York AM on FOMC day? I wait for FOMC. I would be trading after FOMC. I don't use redelivered rebalance, but I know what it is. But I'm trading that logic without thinking about it. So I'm understanding where price is offering fair value and where it doesn't need to. So we have this weekly breaker right here that we can potentially trade higher from this area of fair value. So we can potentially, trade higher, but again, we're creating that weekly SIBI, which I don't like to see. It's a small one, but it is there. No daily gap created. I don't like this. I don't love it. We could potentially trade higher. We could potentially not. I just conflicting stuff right here to me. So I'm going to wait on these currencies. I wish I could play like my personal music. I want to listen to some Dom Fike right now. But I can't, or I'm getting smacked with a copyright. They're on my ass. Bro, if I post anything with like 5 seconds of a song, of a normal song, smacked. Monthly, weekly, failing to show intention to expand here, but we are respecting the bodies. The wicks are showing respect to this weekly gap on Swiss franc. So I'm watching this area. And I want to see if we end up creating gaps out of it. We're just consolidating right now on the weekly. So I really don't like 6S either. This is consolidation. This is low probability. Nothing's falling through. Traded into the weekly gap. I don't love it. I would proceed with caution on these stickers. I'd be waiting for more. I'm demanding more out of price always. But these are bullish too, right? Yeah, I would favor, gun on my head, I'm favoring longs. We have the weekly gap. I favor longs on most of these currencies. But they don't look the most beautiful. Like euro and pound are what look good to me. Everything else looks, there's some red flags. So if there are clear currencies here that look really good to go higher, like if euro is clearly strong and euro starts showing a lot of strength, then you can take that logic, understanding the individual currency, and apply that to the crosses down here. So if euro is going to be strong, then anything with a euro based currency should be strong. And you want to pair that strong euro based currency with a weak quote. And that's the currency duality theory. That's understanding weak and strong currencies and pairing them together. And you're gonna get your explosive moves. All right, I'm gonna kick this into overdrive a little bit in terms of my analysis and start just running through these crosses. Do you use SMT? Do you require SMT to take a trade? I know a lot of people that do. I don't. I use relative strength and weakness, but I don't use SMT. I just understand for value gaps. I understand based on the order flow and candlesticks what is stronger and what's weaker. But I don't use SMT. I have no issues with it. I think it's good. I think if it resonates with you, then use it. But I don't like it. Just for me personally, I don't use it. So we had a disrespect to that weekly gap. But now we're kind of trading higher. So this is kind of conflicting as well on AUD CAD. Someone just asked about AUD CAD, right? What do you think of the monthly internal to external? It's all right. Right now it's just kind of monthly chop. I don't love it. But we are still respecting that monthly gap. Daily. I do like the daily bullish gap. And I like this liquidity here. This looks good to go. So I do think that this ultimately trades higher. But you want to be seeing higher on Australian dollar. So the daily gap does add some to it. I think that this can ultimately trade higher now. But yeah, I like this to go. I add it to the long list, but you do want to be seeing higher Australian dollar, which I'm pretty sure. Let's look at AUD NZD for correlation. Okay, AUD looks stronger than NZD to me. Well, at least it's about to be now that we're shifting. I'm expecting this to continue to trade higher. Yeah. So that might work out. AUD CAD longs. Added it to the long list. If there is no fair value gap for you, it is low probability. 100%. 100% yes. I don't use indicators. Zero indicators. Fair value gaps are my indicator. I put a gray box on my chart. Boom bow. Boom bow. She gonna skateboard P. Not much to take here. No gaps on the weekly. Daily. Box in the line, man. Box in the line. That's all you need. Gray box, gray line, print. It's a money printer. Once you understand price. All right. So we have this monthly gap, this monthly SIBI up here that could act as a draw. Why? We swept external. We swept this sell side. Now we're wicking it. We're respecting it. So this range from this swing high to this swing low has my eyes on the monthly. We could potentially trade towards that monthly SIBI. The daily is now shifting bullish, creating, bullish for value gaps higher. So we could potentially get longs here in higher Australian dollar Swiss franc. Euro yen and pound yen. Yeah, why do you think euro yen and pound yen are looking good? Because euro and pound are looking good. Feel me? When the individual currencies look good, the crosses are going to look good. Really, 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 really important to understand. So when all the currencies look like cheeks, when all the currencies look like shit, you bet your ass the crosses are not going to be looking that good either. Because when the individual currencies are moving, the crosses are going to be moving. You know this shit, my bro. I love it, man. I love this stuff. I live and breathe these charts. I got to know my stuff. At what perspective does your edge give you advantage? Like LT, everything. It's everything from the top down. It's every perspective. So understanding where the weekly and daily are drawing to, and then understanding what PD rays we're trading off to get towards that draw. And then from there, when we trade into those PD rays, creating an entry model that has a high probability like shift in order flow that gives you a favorable shift in order flow. That's all those things combining and then pairing that with relative strength and weakness. That's your edge. That's where your edge comes from. Monthly gap, monthly SIBI, we were expecting lower. AJ here looks really good. Anything XXX yen, I think it looks really clean. I've been saying this for the last couple weeks. Expecting lower on anything XXX yen. Why? Because we have a bullish yen. So when yen is extremely bullish, anything XXX yen is going to look clean and bearish. Anything yen XXX, which again obviously isn't a thing. There is no yen XXX, but in terms of other currencies and you know crosses, that's how that works. You get what I'm saying? So let's use Australian dollar for an example. If Australian dollar, the individual currency future right here that I'm looking at, is extremely bullish, anything XXX AUD is going to be bearish, hypothetically, it should be, and anything AUD XXX should be bullish. So I might be repeating myself here, but a lot of people don't understand this, and that's really important to understand. Monthly gap. So we already know that, you know, the daily 4 hour are going to be creating gaps lower based on this expansion on the monthly. I'm already knowing that the lower time frame has shifted and created gaps lower. You have a weekly gap getting created. Beautiful. I really like this. I really like this. Anything XXXN right now looks nice. I'm already knowing it's going to look nice. Yeah, this looks good for lower. Definitely throwing that on the short list. Beauty. Clear one-sidedness, clear gaps, clear intention from price. I love this. This is that context. We talked about this in the last stream, bro. When you have monthly context, you want to be milking that monthly context the entire month because you have a full month of a clear draw from here to here. This whole month you have a clear draw towards that sell side. So you best believe you better be taking shorts on that entire month. Can you show yen futures again? Straight expansion. So when yen futures are pushing, XXX yen should be weak and it's going to be selling off. So you want, you want a weak base currency. Whatever is going to have the weakest base currency. So XXX-JPY. So JPY paired with the weakest base currency. That is going to be the cleanest shorts that you can find. So whatever is the weakest out of these currencies, you want to pair with JPY for shorts. Weak base currency, strong quote currency equals this, man. It equals this. It equals that. Straight down. All right, let me see this. House foot out so many bad pairs and unfavorable conditions. Exactly. Which prop firm are you funded with? I'm funded with Apex, Trader Funding, My Funded Futures, Top Step, Elite Trader Funding. And then I actually just bought an account with Tradeify, like an instant funded account. So I didn't even do a challenge for them. I just bought an instant funded account. But I have all those on a copier. I'm just trading futures. Isn't trading two strong pairs together a low probability? Yes, ideally you don't want to be doing this. But when I'm going through and doing the analysis on these crosses, I'm really not factoring in the individual currencies. So that sounds counterintuitive to what I was just saying. So let me elaborate and expand on that. During the actual Sunday streams, like this exact stream that I'm doing right now, I'm just looking for clear draws on liquidity. I'm looking for things that feel obvious. I'm looking for things that are showing willingness to move, have gaps on the higher time frame. Then once Monday comes around, I'm not trading forex right now, but if I was, once Monday comes around, that's when I'm really starting to think about the currencies, the relative strength and weakness of these currencies. So if I'm interested in XXX yen pairs on the week, okay, cool. Out of the XXX yen crosses that I marked out on Sunday, aka today, which of these can I pair with the strongest base currency? The weakest base currency. So which of these currencies are the weakest? That's the XXX yen cross that I want to be trading. I kind of explained that poorly, but hopefully that makes sense. So once the week comes around, that's when I'm really starting to think about, okay, AUD CAD is two strong currencies. So that's probably not my favorite cross to trade versus, okay, whatever XXX yen is a extremely weak base currency with a strong yen. So that's the favorable cross to trade. That's the type of stuff that I'm thinking about once the week rolls around. So hopefully I explained that clearly. I don't know. Crazy how simple internal and external is. It gives an insane bias. Yeah, it's all just liquidity and fair value, man. That's all it is. Saucy, what's up? What's up? What's up? Appreciate you coming in, tuning in. Hanan asked, good question, by the way. Do you think about this? Right? Where? Oh yeah, I just answered that. So if crosses gives you clear bias, futures not that important, right? I still consider the futures. The futures make the crosses move. You got to understand that the crosses are two futures. The crosses are two currencies paired together. You know what I'm saying? So when the individual currencies are moving, the crosses will move, and when the individual currencies are shit, the crosses are probably going to be shit. So understanding the individual currencies is very, very important to trading the crosses. Show your chart settings. I do this like every stream, but it's fine. It's fine. I think it's okay. This is my green one. A5, D6, A7. D 606B. There's my chart settings. Hopefully that's good. Greetings from Nigeria. That's sick. What's up, man? Appreciate you tuning in from Nigeria. I will absolutely be analyzing NAS 100 for you. All right, let me get this going, man. What was I? I was about to say something that I just had a brain fart. I'm all over the place right now. Monthly bullish order flow, weekly, no gaps, right? Within this range, like we talked about, like I always say, the only range that you need to worry about is the most recent swing low to swing high, because that's all price is going to be referring to in terms of order mitigation. So when we're trading, we're kind of just positioning ourselves, we are just positioning ourselves to trade off of those areas of order mitigation. That's all that market maker models are. So if you guys have watched the market maker model video, I don't know why it looks so bad. If you guys have watched the market maker model video, you understand exactly what I explained. So if you haven't watched that, I would highly recommend. I mean, that's literally the logic behind why price does what it does. I genuinely think, like, and I'm not even trying to sound egotistical, but I genuinely think that is the best market maker model video that anyone has ever put out in terms of like YouTube content. ICT has amazing market maker model videos. That's probably the best one. And then I think mine is second. I truly believe that. I think that video is just sauce. And so these areas on the opposing side of the curve, they become areas of order mitigation for price, right? The order blocks on the sell side of the curve become these areas of order mitigation for price. So when you're just focusing on the most recent range and you're understanding these areas of fair value, you're understanding the gap here, right? There's going to be a gap here, and the gap's going to overlap with this swing high, this area for value. You don't need to look over here because you're inherently trading off of these areas of order mitigation. Then the next leg, this swing low to this swing high. All you have to worry about is this. And then if it's going to be drawing higher, it's going to trade off that area of order mitigation. So do you see how this all ties back into what I said earlier in the stream? If we're both going to the same destination, but I can get there in an easier way, why would I not do that, right? I have this, like, this is one of the most simple ways to view price that you'll find anywhere. And I'm getting to the same destination as the same guys that are going like this with 400 indicators and worrying about all the noise. Like, you know what I'm saying? Like, why would I not trade the way that I trade? I'm getting to the same destination. And don't take that the wrong way. That's not ego. That's me trying to make a point about how trading can be simple. That is not me. That is not me trying to, you know, inflate my ego or whatever. I'm no better than anyone. What I'm doing is not that special. I have a simple understanding of price based on the core foundation and principles of how price books. And so the point I'm trying to make with this whole rant is keep it simple. If you can get to the same destination in the most simple way possible, why would you not do that? Because it only helps you. Trading is ups and downs. There's going to be months, like trading is literally like this. And then it starts to, and then this is where you get profitable. And then this is the beginning. Then you hit your like break even stage. Now you start to be profitable. Things go up and down, but your equity curve goes up. Right? So when you have a simple strategy, when you have a simple understanding of price, you're able to endure those ups and downs, and you're able to have confidence in what you're seeing in price and not deviate. But anyways, lots of rants from me today. You look swole, bro. Thank you. Honestly, I've been lacking in the gym. Like lacking. It's actually bad. I've only been going to the gym lately like 2 or 3 times a week. Usually I'm like 4 or 5 and I go hard, but my lifts have not been good. So I got to get that dialed back in. I'm lacking. That's not going to slide. Definitely need to get that dialed back in. All right, so this is our area for value we mentioned. This daily area for value we're delivering higher off of AUD NZD. So I'm watching this to potentially trade higher. Still bullish bias, but I want to see new intention through these areas here. I want to see price actually show the willingness to want to expand. Because right now, oh, there is one on the 4 hour. That's not bad. So I'm expecting higher. I was going to say right now it's not creating a 4 hour gap, but it did. So I want to see higher off this. But there's no context right now that I like to operate off of. So I'd be waiting to operate off some context here. As a forex trader, do I have to focus on futures or crosses? If you're trading forex, just focus on the majors, crosses, and then if you want to implement what I teach about the currencies, the individual currencies, then look at the currency futures. The whole point of doing the currency future thing, the whole point of weighing, engaging whether or pairing a weak and a strong currency and using that currency duality theory is what I call it. The whole point of that is to be able to consistently pick out the best cross every week so that you can pick out the highest probability cross to trade. Yeah, majors and crosses, that's all forex is. If you're trading forex, it's just majors and crosses. It's just the foreign exchange. If you're going to trade futures, it's a different story. I'm not interested in this. Insta skip, man. Insta skip. Get that thing out of here. CAD yen. Anything XXX yen. Like I said, looks really nice. Loving it. Loving these XXX yen pairs. I said this last week as well. Go fact check me, man. Look at the analysis. I love the streams. I love the live trading because it holds me accountable as well. And you guys are gonna see me get price wrong. You guys are gonna see me get things wrong. It's not about being right or wrong, but what you're gonna consistently see as well is how I'm just aligning with price. I'm flowing with price. So even if I'm wrong about where I'm expecting the week to go, or the day to go, or the 4 hour to go, I'm immediately realigning myself with the direction of price. I'm reading the gaps. I'm reading the order flow. I'm not attached to what I said before. So if I said, I'm expecting this and it doesn't happen and the gaps are pointing this, I'm understanding that. I'm staying in alignment with price. That's all it is. There's no need to be right or wrong. Just straight gaps here. We're creating a new daily gap. Well, this is obviously the expansion candle. I'd expect this third candle to create this new daily gap and potentially frame shorts off that. So I'll throw this on the wait. I'll throw this on the wait list, waiting for the daily gap. But another yen pair dying. What do you expect, right? Because yen is pushing. Yen is pushing. This is our area of fair value because we've offered sell side, we offer buy side, and we offer sell side. So once we offer buy side, if we're gonna go lower, we should trade lower off that. Daily gaps here being created by price. We've already traded all through this. There's no context here though to operate in, so I'm good. We're looking for that context to operate off of. Monthly swept that, weekly, gap higher, daily, lack of gaps here. I don't like this. Monthly, bullish order flow, weekly, trading off this gap. Didn't create a gap higher, then stop hunted this leg. That's an interesting hunt. So this is just a hunt. What would have tipped its hand that this is a stop hunt? Well, it's the fact that there was no gap in this leg. There's a lack of a fair value gap in this leg. So it hunted this low and then respected. That's just a stop hunt in the direction of price. Or in the direction of the draw. Jeez. But now there's a weekly SIBI that we traded into. Now you have this weekly SIBI. So I want to understand whether or not we respect or disrespect this SIBI. If we create new gaps through that on the 4-hour and daily, then I'll be interested in targeting this buy side again. But I'm waiting on this. So there could potentially be some selling here, but right now there's just no context. I want to wait for the daily gap, and I want to wait for this to get disrespected. So could go higher. I'm actually going to throw that on the wait list, but I want to see that weekly gap get disrespected first. Sell side, weekly traded up. We have this weekly SIBI now. Small one, but it's there. I'm looking for price to trade into that and then potentially continue lower. So we might have weekly context there. Potentially shorts, but it's interesting because euro is strong. So I'm actually gonna just leave that. I'm not interested in that right now. Too conflicting. What is your entry model? My entry model is just a shift in order flow. For my Solus model, I have a different entry model. For the swing model I taught, it's just a shift in order flow. A fair value gap, a change in state of delivery. Euro pound. Looking for lower prices on euro pound. So if euro pound is going to go lower and confirms that it's actually moving lower, then I would expect pound to actually be stronger, which is interesting. We have all this low resistance liquidity, bro. They're just engineering this. I mean, they make it too obvious. I'm expecting this to go. This is straight chop. I'm expecting that to go. So I want to see lower prices. Let's see if we get lower gaps. That's what I would be expecting that. Weekly, bearish fair value gap. Daily. So even with a stronger base currency, lower yen, added to the short list. Weekly internal to external. But euro is the base currency. I want to see the 4-hour shift there if we're going to trade lower. We do have that context, but again, we have a bullish euro. Is it enough to disrespect 4-hour because of the time frame alignment, or should we? Can you rephrase that? I don't understand that question. Weekly gap trading higher, daily SIBI, conflicting order flow, right? Trapped order flow. Yeah, I don't like this. Pound CAD, weekly gap. Consolidating. This is just straight chop. I'm good, right? Until we actually show the intention to move here, why would you even look at this? I'm done looking at it. I'm not wasting my time on that. Weekly chop as well. I don't like this either. Pound yen, we have an XXX yen. Monthly context, internal to external, weekly, creating a gap out of that monthly gap. I like this for lower. I'll add it to the short list. But again, we want to be pairing the weakest base currency with the strong yen. So we would want to figure out of these currencies, what is the weakest? That's the XXX yen pair that we would want to be trading this week. Interesting, we didn't trade into that monthly gap. Weekly, no gaps here. Daily, slow price action. Not interested. Weekly, internal to external prices, respecting this area still potentially to trade higher. But we have the strong pullback, no gaps. I really don't like this. No 4-hour gap. We could potentially trade higher from there, but we'll see. I really don't like it. Didn't trade into that monthly gap. Weekly. There's just a lack of intention here to go lower. New Zealand dollar yen. This could be good. New Zealand dollar yen looks good. So I like the yen pairs a lot, as you can see. I'm adding that to the short list. Indices. For my guy from Nigeria, man. This is NAS 100 for you. Analysis. Monthly bullish order flow. Weekly. Respecting this weekly gap. We've had a strong shift. It looks like we're trading higher now, which is interesting because throughout here we were expecting lower prices with the way that the daily was looking, with the way that the daily and 4-hour order flow is pointing. But now that we've had that shift, I think we're going to trade higher here. Potentially looking at longs on the menu here towards the buy side. We're respecting this gap still. We're creating daily, the daily shifted in order flow. The daily gaps are pointing higher. So I'm looking at longs. Like that for longs. Same thing here. We're respecting this order block, but we're showing a lack of intention here. We haven't created a new gap higher. Weekly. These candles are crazy. Potentially trading towards that external. Daily gaps higher. Want to see if these gaps get respected by price when we trade into them. So I'm looking for us to trade lower into this daily gap, and then we'll be watching these longs potentially. Oil is bullish. I'll check it out. Got you right here. Monthly, I think oil is bearish. Maybe in the short term bullish. Yeah. I'm looking at this weekly gap on oil to deliver price lower. We have this area of fair value. So in the short term, I would say oil is bullish, but I think it's just bullish to go lower. Weekly, monthly perspective, like macro perspective, I think it's bearish. So I think it's going up to go down is what I'm seeing. So that weekly gap, that weekly area of fair value, I'm looking for this daily gap to send price higher towards that weekly area of fair value to go lower. So bullish up to go down, bullish to be bearish is what I'm seeing on crude oil. So I'd be favoring longs right now in the short term towards that weekly gap to go lower. Bro, why are you not answering me? Are we offended? No. Is it enough to disrespect in 4-hour because of the time frame alignment? I think your question is just confusing me. Are you saying from a weekly gap, like, is it enough? You want to be reading. So if we trade into a weekly PD rate, you want to be reading the 4-hour order flow. Do we continue to make gaps on the 4-hour through the PD rate, disrespecting it? Or do we shift on the 4-hour respecting that weekly PD rate? Out of context question: how did you come up with your name Trading Patiently? What's your origin story? That's like a really interesting question. I feel like I never get that. So trading patiently is just a play of words, right? There's the phrase waiting patiently, patiently waiting, waiting patiently. So trading patiently is like a play on those words first. But second, I think that being patient, trading patiently, that's one, like being a patient trader is one of the most important qualities that you need to have, because you have to have a setup. You have to have a specific setup that you're looking for, a specific edge, and you have to wait for it patiently. You have to be, obviously not for every style of trader, but the majority of traders, like, you have a setup and you have to patiently wait for that and strike once it's there. So what you also see is my logo is a Siberian tiger. The Siberian tiger is the most patient predator. So trading patiently, you're patiently waiting to pounce on your setup, just like a Siberian tiger is, you know, the most patient predator in the wild. It's waiting to pounce on its prey. And so all that stuff is like the origin of it and how I came up with it. But I think being a patient trader is one of the most important qualities to have. So yeah, I'm looking for higher on crude oil to potentially go lower. Monthly is expanding, weekly internal to external played out, and we're expanding through. So gold was really sloppy in through here. I talked about this in the academy. I talked about this to everyone in the server. Sloppy in here, and then we're expanding. Now we're actually showing that intention to want to move. And so on the daily, I'm looking at this area overlapping with this fair value, or this, I'm looking at this fair value area, this swing high overlapping with this fair value gap. But we may just continue to expand. If that's the case, then I'll look to long off the 4-hour gas. So we'll see. We could potentially pull back towards this daily area here. But I have that on the long list. Silver as well. Not following through from the weekly context. Right? We have bullish gold. Should be bullish silver. This area here, we're showing the willingness to expand. Metals look very bullish to me. I'm expecting higher prices. I'm long biased on both of them. If we pull back, it should be just to continue higher. So pull back to a discount rate is valid, like this area here. I like this to potentially send price higher on silver. And yeah, that's pretty much it. That's the forecast, man. I hope that there was some value in this. For those of you that want to trade with me, for those of you that want to be in the academy, I do a free trial. So there's a free trial to join the Trading Patiently Academy and live trade with me for 7 days. Literally a no-brainer. I talked about this in the last stream, but it's a no-brainer. If you don't like it, just cancel like after the free trial, and you won't get charged. Like, it's just a free trial, a free week of trading with me, soaking up knowledge, learning, getting value. So I don't know why you wouldn't. It's a no-brainer. But yeah, if you guys want to do that, I'd love to see you in there. We have another week of trading ahead of us. So join the free trial if you haven't already. And if you don't like it, which you will like it, but if you don't, just cancel. No brainer. So you get some free value. Either way you win. It's a win-win. I love you guys. I appreciate you guys tuning in. I hope that you guys got value from this. Like all my stuff, you know, I hope that you are able to take, you know, some value from it and become a better trader. And yeah, that's pretty much it. I hope to see you guys in the Discord, in the academy, whatever it is. And appreciate you. I'll see you guys later in the week. I'll probably do another live trading forecast sometime throughout the week, and then I'll be live trading in the academy multiple times per week. So, all right, guys, love you, appreciate you. Let's have a good week. Let's crush it. Let's be disciplined.